traders, happy Memorial Day, and I hope you are enjoying your long weekend. Julius here at the start of the week with a quick look at an interesting development, at least I think, in the communication services sector. As you know, communication services has a lot of mega caps names in it. So when I was going over a number of RRGs, and then especially comparing the cap-weighted RRGs with the equal weight RRGs, I noticed quite a significant discrepancy between the cap-weighted rotation of communication services and the equal weighted rotation of communication services. So let me start here. This is the RRG of the market cap weighted sectors, and communication services XLC is kind of buried here inside the weakening quadrant, but it started to rotate up. So if we blow that up, you can see that tail moving all the way up. So it's a positive tail, because we know that when a tail is inside the weakening quadrant and it curls back up, it's usually a strong sign, because what this means is that XLC is already on the right-hand side of the graph. That means that it is in a relative uptrend versus the S&P 500, which is the center of the chart. It rotated from leading into weakening and now back up. So what this means is that it's starting a new leg in an already established relative uptrend. So it's a strong sign. It's probably one of the strongest signs that you will get on an RRG altogether. Now, when we create the same RRG, but now using the equal weight version of the sectors, which is this RRG right here, you see now that the tails are the equal weight equivalents of the S&P 500 sectors. And when we now look for communication services, which is RSPC in this universe, we see that it is located completely on the opposite side of the XLC tail, which is inside weakening and rotating back up. The direction of the tail is similar. So that is the good news. The RRG heading, which we measure from the previous observation, the previous node, to the current node, and you got to imagine like a compass across this T-1, I call it. And you will see that this is now between 0 and 90 degrees. It's rising on both scales. And it's the same what we saw on that XLC tail. Now, the fact that these tails are located so differently is because of the weight of a number of very well performing stocks inside the communication services sector. When we bring those in, we can see the components of the communication services sector, and you can see that Meta is almost 22%, and Alphabet, which has two share classes in this group, is actually over 26.5%. So in a way, Alphabet is actually the biggest sector, although it's listed as number 2 and 3. You can add these up because these share classes move in line. So it's 26.5. So this is 47, almost 50% of the communication services sector is impacted by only two stocks, Meta and Alphabet, Google. And obviously these are big stocks inside the sector, but there's also big stocks inside the S&P 500. So undeniably, they'll have a very big impact on what's happening on the RRGs. Now back to our RRG, the fact that XLC is positioned on the right-hand side reflects the strength of Alphabet and Meta. They've been doing really well, and they have pushed that tail all the way to the right. And it has been leading. Those stocks have been leading that sector, have been curling it back up. And it looks as if right now the second and maybe third tier stocks in that sector are starting to pick up, because now we see that tail, RSPC, to start picking up as well and rotate into the improving quadrant and towards the leading quadrant, which is signaling underlying strength for communication services stocks. And this also shows up because right now we're using RSP as the benchmark. So this group of sectors is now compared to RSP, which is the equal weight version of the S&P 500. If I change that to SPX, which is the S&P 500 itself, you will see, first of all, a significant difference in the rotations. And in general, you will see a negative rotation for these tails. Look at, this is staples, this is materials, this is industrials, here's financials, here's consumer discretionary, healthcare, technology, real estate. There's basically only two tails that are reasonably well, and that's RSPC, which is communication services, and it's RSPU, utilities. All the others are rotating out of favor. And what that means is that the large cap stocks are doing better, because this is now the large cap universe. The S&P is are large caps, and all these second and third tier, or at least when you take out the weight of the large caps, they're rolling over. So this signals that large cap stocks are leading the way. Only utilities and communication services can keep up. And that means that in these sectors, the second and third tier stocks are catching up what has been happening with their large cap equivalents. And then finally, when I blow up this chart and I put RSPC and XLC on the same RRG, again, the S&P 500, then we can clearly see how RSPC, the equal weight version, is rotating much further away, which means that there is more potential alpha to be gained. It has a lower beta versus the market, clearly, because here we've got a number of very big stocks which have a bigger relation to the S&P 500, which is right here. And that's also why XLC is closer to the benchmark. So from this RRG, from the comparison between RSPC and XLC, I'd say that it becomes time, or it's now getting time, to start focusing and looking at potential, because right now Meta and Alphabet are still leading, potential new and strong rotations in individual stocks in the second and the third tier, so not in the large cap and mega cap section, but just one level below it. Thanks for watching. Stay with us, and I hope I'll see you when we do sector industry stock report, or we do Tactical Thursday, Chart Request Live, or any other of the products that we do here at tradinganalysis.com. And otherwise, I'm looking forward to seeing you again next week here on Monday, same time, same place.